welcome to the ABF Journal podcast. I'm Rita Garwood, editor-in-chief of ABF Journal. Joining me on the podcast today is Ian Fredericks. Ian is CEO of Hilco Global Capital Solutions Division Americas. Ian, thanks so much for joining the podcast today.
Thank you. I really appreciate it. I look forward to the discussion.
So let's just start with the big picture. What does ORIX's acquisition mean for Hilco Global and specifically for the division that you lead?
For us, it really means it's an opportunity to accelerate our growth. One of the things that we've been battling with for some time is a more constrained capital structure. We've had different partners along the way, and we've had access to that capital, but ORIX really brings that capital and the availability of that capital to a different level. And it also brings a different cost of capital that allows us to provide different solutions to our clients. ORIX also shares the vision of our founder and the rest of the team of really growing our professional services platform to be able to provide a more holistic group of services and solutions. So on the capital solutions side, it's really about access to additional capital at lower cost and being able to provide, better and more sophisticated capital solutions to our clients. And then also really, scaling our professional services side to be able to provide that holistic group of services to our clients.
So you mentioned the two, the professional services side and the capital solutions side. How do you envision that structure creating more clarity and impact for your clients?
Sure. So number one, if I back up for a second, Hilco was historically structured as a group of opcos, and each opco, for the most part, had a different specialty in an asset or sector of the economy. So the group that I used to lead was the consumer and retail practice, which really focused on inventory and other retail-related assets. Uh, you know, we had that for all different sectors and asset classes. And what we've really done is simplified the structure of the organization into two divisions, one being professional services, one being capital solutions. So that really allows for our clients to get a more streamlined, way to enter the organization, and then more streamlined leadership to be able to, provide the services and solutions we want to. In addition to that, what I would say is we also maintained the aspect of our business that had sort of sector specific experts. And so we're very much working on what we refer to as a matrix organization, where you have the two divisions being verticals, and then you have horizontal subject matter experts that run across the two. So in addition to my role as the CEO of the Capital Solutions for the Americas, I'm also the executive director of our retail and consumer practice. And so where we're providing services or solutions in the retail and consumer space, and let's say that's in the professional services side, they're able to pull on my expertise and leverage me and other members of the team that really have a focus in consumer and retail to be able to deliver a differentiated service offering on that side of the house. Obviously, I'm there on the capital solutions side already, and we have that for commercial industrial, for real estate, for accounts receivable, for intellectual property. So we really wanted to maintain that subject matter expertise and be able to now cross the platform, to deliver best-in-class services.
That's great. So from your perspective, what synergies are most compelling between ORIX's platform and Hilco's expertise in asset valuation and everything else that you do, like credit solutions?
Yeah, look, I think there are a lot of synergies. The biggest one is, ORIX is both an investor, so they invest off of their own balance sheet, but they're also an asset manager where they manage third-party capital. They have a tremendous amount of expertise in that area of, both raising and managing third-party capital. So in that sense, that's bringing that level of expertise that we don't have as much in, and that's extremely synergistic. And we're already seeing the path to going out and raising capital accelerated, far faster than what we had originally estimated when, we were going through the diligence process and even at signing. So, in that sense, we're already seeing the synergies form. As both a investor on their own balance sheet and investing for third parties, we share that similarity. They're different scales. I mean, ORIX is a multi-billion-dollar organization, and we were obviously much smaller in our growth trajectory. So I think they can really help us implement the policies, practices, and procedures to be able to take our organization from where we are now and really scale it, to the kind of growth that we all hope we're able to achieve. And then we're complementary of one another. ORIX has some other, they're deep in lending, and they have some other subsidiaries within the ORIX USA platform that do different types of lending. So there's NXT, which is a cash flow lender. They have another lender that focuses, or another subsidiary that focuses more in real estate. That's very complementary with our real estate business, which has a lending practice, but not at the scale that ORIX currently does. And we also want to be able to bring it worldwide. And so this really gives us an opportunity to enter or really scale our operations in various areas of the world where we're either not right now or that we're there, but we're not as big as we believe we can be. So, that's really what we see. And they share a very similar vision. They also love, and this is probably the one that's the biggest driver of things. There are a lot of asset managers out there, and those asset managers are in private equity or private credit, or other areas, but typically they don't have a complementary advisory or professional services side of the house. We're really putting together what we believe is a differentiated offering by bringing those two together. So both the asset management side and that advisory side, that's not there in the market from what we've been able to see, or if it is, it's not there at the scale that we want to go to.
So Hilco has been known for a very long time for the work that the company does in stressed and distressed situations. With ORIX Capital backing you, how do you see private credit and asset-based lending capabilities expand?
Sure. So we actually will continue to call that. We're really looking at that as our opportunistic investing. That's the core of our business. It's in our DNA. We certainly don't want to lose that, and we want to be able to be there to continue to capture that. What the additional capital and a cheaper cost of capital is allowing us to do is to open up our client and solutions base to be able to provide differentiated lending at a lower cost to healthier companies. That's really where we want to go. We've been able to do some of that, but because of some of the capital constraints that we had, and the cost of our capital, we weren't able to do it at the scale that we want. We see a tremendous amount of inbound opportunities in that space, and so often in the past we've had to get extremely creative, bring in some other lenders, and structure it in such a way where we could do the transaction. But what we're hearing from many of our clients is they'd love to just continue to do business with us and have a more streamlined relationship. And we want to do that. At the same time, we want to continue to partner with lenders who have been good partners to us and can help us, be able to provide a more holistic solution, to our client base.
So you just mentioned those companies that are looking for lower cost capital and having a greater ability to serve them. Do you see that as your greatest growth opportunity over the next 3 to 5 years, or do you see it in another area of the business?
We really do. We see that as our largest growth opportunity. We're really going to be able to offer, uh, capital solutions to our clients in the single digits or in the low double digits. And, that area of the market, there's a lot of opportunity. There's a lot of competition too. And we really believe that, with ORIX, we're able to offer a differentiated solution. We're able to move quicker, because we have the institutional in-house asset expertise. So we don't need, as an example, third-party appraisals, because we can do a lot of that stuff internally. So we can really deliver a solution on a faster timeline, in a better structure, at a better cost of capital to our clients. And that, given those things, we really view that as our largest growth opportunity, and we really want to bring that to more markets than we're already in now.
So this acquisition positions the company as both an asset manager and a principal investor. How will you balance those dual roles in the market?
Sure. So, first and foremost, where we're managing outside capital, we have, certain responsibilities to those investors. We've been dealing with that over the last several years and, balancing it appropriately. In my mind, a tremendous amount of it is associated with disclosure. We want to be upfront with the people who are entrusting us with their capital. But what we really see is we're going to create, different opportunities and different pockets of capital, for our investors. So, we'll have opportunistic, we'll have, other mandates. They'll be able to mix and match or go into everything. And we look at our balance sheet as just another source of capital. And so to the extent we don't have a pocket where, investors have interest in certain things that we're doing, we'll be able to leverage our balance sheet for that to be able to continue to provide, those services and solutions to the clients. So to our clients and customers, it's seamless. To the investors, we want to give them all of the opportunities they want, and where there are pockets where we either, it's not ideal for investors because the capital maybe comes back too quickly, or it's just not an area where we're seeing much interest, we'll leverage our balance sheet for that.
So most of our audience are in the specialty finance and ABL world. For lenders and advisors there, what should they expect from Hilco in terms of partnership and deal execution and capital availability?
They should really expect a lot of the stuff that they've already received. I mean, one of the things, and when you buy a company, I think, and I haven't been in that situation where I've bought a company, the last thing you want to do is break something that's good. You really want to, keep the stuff that's really good and give that company opportunities to be able to grow. And that's very much the way ORIX looks at the world. And so I would think for our clients and our, and customers and partners that we work with and advisors, law firms, things like that, you can expect the same group of people you've been working with, the same level of service and attention that you've historically had. There are definitely going to be some new processes and procedures we're going to have to go through. So we're going to have to, do probably a little bit more KYC information, know your clients. So we'll have to ask for some new information, but we really want this to be, minimally disruptive in terms of what, people who've worked with us historically have come to expect. And certainly they should definitely expect the same level of service and attention with, even more arrows in our quiver to be able to deliver, solutions for their clients.
So you've already mentioned private credit multiple times in the discussion so far, and that's been expanding in the space for some time. How do you see Hilco interacting with banks after this acquisition? Do you see the company taking a more competitive stance? Are you going to be more complementary? How do you see it?
I don't think that anybody can achieve the cost of capital that banks can. I mean, when you're dealing with depositor money, it gives you a massive advantage in terms of being able to price opportunities. Even with that, I still don't see us as being competitive with banks, right? We offer, some banks are on the professional services side, some of our largest customers from an appraisal standpoint. We don't want to obviously disrupt that. We view it as being able to partner with banks more so than anything else in ways that some of our competitors have historically done. So often banks are looking for, to be able to provide their clients or customers with additional layers of capital that don't fit squarely within the bank's mandate. And so, able to stretch a little more or provide different term loans or things like that. Those are areas where we'd look to work with banks. I really don't see us being competitive with banks.
So how do you see this transaction influencing broader trends in specialty finance, like consolidation or capital flows or borrower expectations?
Look, I don't know that it's going to change things dramatically. I think what you're seeing right now in the market overall is a rise in asset-based finance and especially asset-based lending, where it's really around a structured borrowing base where the assets are what give rise to the availability for the borrowers to be able to, to borrow money. I see that very much staying the same. One of the things that we really think we can bring, because we've been really historically good in the more opportunistic situations where there's more stress, more distress, and there's a bigger, there's more risk associated with it. We feel like we have that really well, under control. So now we'll be able to offer, I think, more unitranche opportunities for borrowers where they only have to deal with one lender. We can provide them with a revolver solution. ORIX gives us that capability to be able to revolve, something we haven't historically had. We're able to provide maybe a middle chunk of capital in that unitranche, and then stretch further than anybody else in what I would call the more the more stretch side or opportunistic side of that we can fill out that entire capital stack. There really aren't many, if any, players who are able to do that. And now we have the capital to be able to deliver that kind of a solution. So I think that is going to be looked upon favorably by the people who are out there raising capital for borrowers, and also by borrowers themselves. They'd much rather have a more streamlined, single point of contact that they have to deal with from their borrowing. And we think we'll be able to deliver that.
So Hilco's always had a deep connection to hard assets. I actually recently did a podcast with someone from Hilco Receivables about, large ticket equipment types and the impact of tariffs on them. How do you see this acquisition shaping your approach to equipment-based lending and finance?
So equipment finance is really an area that we want to go into. We're actually diligencing a couple of opportunities now. They're at various stages, but we really see the equipment finance universe is something that is very complementary to our existing skill set, and it's something where we're really looking at as a growth opportunity. If I step back, we're really focused on scaling the asset-based lending business first, but as I said, we're in the diligence phase, and we want to bring that as an offering to our clients in the very near future as well.
Great. So last question I have for you. If we revisit this conversation in 2 years, what milestones would you hope to point to as proof that Hilco's partnership with ORIX is delivering on its promise?
From my perspective, it would be that we've really, grown our assets under management, between now and then, pretty significantly. We've really expanded our capabilities within North America. We're looking at opportunities in Canada and Mexico, in addition to, expanding our presence in the United States. We have a very strong presence in the United Kingdom and Australia, and we really want to penetrate more into, several of the European Union countries as well. So I think if we're able to do all of that in the next 2 to 3 years and really have, a large amount of assets under management, from a diverse group of investors, I would say the transaction is on its way to a success. I wouldn't say we're successful in 2 to 3 years. We got big ambitions for where we go, but we're on our way to success if that's what it looks like in 2 to 3 years.
That's great. We'll have to follow along and see how you do with those goals. Thanks so much, Ian, for being on the podcast today. Thanks for having this conversation. It's been great talking with you.
Yeah, I really appreciate the opportunity. I really hope you have a nice weekend. Thank you very much.
Yeah, thank you. You too.